Assalamualaikum, my name is Nurul binti Aziz and I will be presenting about pandemic Covid-19 effects on corporate bond market in
For
Malaysia.
introduction, the corporate bonds are debt instruments that issued by both private and public organizations. The corporate bond market accounts for the majority of the global bond universe, and they are issued by firms to develop funds for a number of objectives, including the newly constructed facility, the purchase of equipment, and the expansion of the firm. However, when the continuing COVID-19 outbreak happened, it has caused substantial disruption into the global economic activities. Volatility in financial markets, in particular, has reached levels not seen since the 2007 until 2009 financial crisis. Reports of the illiquidity in key financial markets surfaced as the price of shares and debt dropped. Next is the significant impact of COVID-19 towards corporate bond market in Malaysia. So, despite some downside risks due to the pandemic, the Malaysian bond market is expected to remain strong in the second half of the year, although there are some difficulties in the first quarter. The recent strength could be attributed to firms' financing needs being front-loaded in order to lock in lower interest rates, especially given the significant upward pressure on bond yields earlier 2021. Vincent Foon, which is the Maybank head of fixed income research, he admits that the first quarter was very extremely difficult due to the synchronized rise in global yields. He believed that this will help to sustain the issuance momentum into the second half of 2021 with 100 until 110 billion in gross corporate bond issuance. On the other hand, according to Chief Executive of the Malaysian Chamber of Commerce and Industry, domestic economic growth is expected to be positive. He believed that the rapid growth in the industrial production in March portends a stronger economic recovery in the coming months. In May, the Malaysian bond market saw its 13 consecutive months of positive net foreign inflow. However, analysts believe that this is likely to change as inflationary pressures in the United States rise. So as you can see here, this is the figure shows the foreign flows into Malaysia bond market from the year 2010 until 2020. According to the CEO of Bond Pricing Agency Malaysia, Mior Ayub, he said that foreign inflow may slow in the coming months if the Fed becomes hawkish by tapering the quantitative easing program later this year. The management of the COVID-19 pandemic in Malaysia is currently a key growth and barrier factor. The bond investor will be more confident if the pandemic curve is flattened soon and vaccination programs ramp up. Next impact is the Securities Commission Malaysia pays more attention to the corporate bond market. The Securities Commission Malaysia has increased their stress testing and monitoring of corporate bonds. Given the potential impact of COVID-19 on debt issuers, the regulator said it had proactively monitored corporate bond issues from the oil and gas, retail and hospitality, and aviation sectors. The Treasury Department also stated that several corporate bond issuers requested exemptions from payment of coupon, profit, or principal, as well as time extensions in order to meet agreed financial ratios and other forms of refinancing. Moreover, 6 corporate bond rating downgrades were observed in 2020 compared to 7 in 2019. Half of this came from the retail and hospitality industries, 2 from infrastructure, and 1 from asset-backed security. Last but not least, for conclusion, we can conclude that despite the shutdowns, curfews, travel restrictions, and other policies enacted to save life during COVID-19, the financial market's liquidity has suffered. It is hoped that official macroeconomic policies will ensure the maintenance or improvement of current liquidity levels, allowing businesses and individuals to maintain confidence and allowing for the healing of the socio-economic wounds of the pandemic outbreak.